Hi traders and welcome to the Technical Analysis Market Wrap on Friday the 19th of August. So I've seen some good moves in some of the pairs that we normally look at this week, and we've seen a couple of the indices reach their resistance point that we were actually anticipating. So we'll jump straight into the charts and see if we can identify any trades for today and early into next week. So we'll start out here with the Aussie USD, and you can see that, since we last spoke, you can see we had the big sell-off. We hit the resistance, obviously, around this level here. You can see all the resistance through there, and we saw the big drop. Look, it didn't quite reach the first target that we had set for it, which was around the 68.80 area, but it's very, very close. And I think if it manages to close below the 50 moving average, it's probably likely to actually go a little bit further and probably find that mid 68. That's probably the next real resistance zone. So really, this is the level that I'm probably really targeting now. I mean, our very first level got hit, obviously. I can see that blue line there, but that was fairly quick and aggressive, which is good. But it continued to fall and broke past the 20 moving average. Now, importantly, it closed obviously below that, and it's trying to close below the 50 moving average as well. So if it manages to do that, it's certainly going to have the 68.50 in its sights. You can see that, this level here is going to prove to be, it's just a little bit higher actually, it's going to prove to be a pretty reasonable level to break, because we've obviously got previous support at this level. And if we go back far enough, we'll find more support for it at this level. 68.50 is quite important. So look, again, the signal lines out of the MACD, it's probably signaling still a little bit more weakness. The US dollar strength is probably on a little bit of a charge as well. Look, I'll have a look at that a little bit later on. But, it's probably looking like it wants to get down to the 68.50. That's probably my preference. What I would essentially do now that we find ourselves in the middle of this effective channel between two very key zones, which is the 68.50 and the 70 cent mark, pretty much wherever the daily closes, I will probably trade to. So if it closes underneath the 50 moving average, I will gravitate down to the 68.50. But if it manages to rally and pull up a little bit, then the 70 cent mark is probably the target. So, it's currently sitting at around that, just above 69. So there's a little bit more room to the upside for a trade. Like, you can probably get 70 or 80 pips out of a trade up to the 70 cent mark if that's the way it starts to move. But there's about 50 on the way down, which by the time it actually makes a series of lower highs and lower lows in a smaller time frame, you're going to get about 50 pips down to the 68.50. So both of them are viable trades, and I haven't really got a bias either way. It is very negative at the moment though, so the short is probably more likely to work, but of course there's not as many pips. So realistically, either would be a reasonable trade. You can see that we've got the candle's already closed below the 50 really. So, any trading action throughout today's session, if we see a series of lower highs and lower lows, I'd be aiming for the 68.50. And of course, if it manages to close itself above the 50 moving average after the New York trading session, then the 70 cent is a likely target. If we go to a 1 hour time frame, that's where you're going to get in on these scalps. Of course, like you can see that we've got reasonable moves. It's flattened out a little bit here, but the targets are very clear for you to see. If you break this level, effectively, if we get a series of lower highs and lower lows, is what I'm talking about, it needs to do that to get to the 68.50. So if we get a series of lower highs and lower lows, we'll trade it down to the 68.50. And if we get a series of higher highs and higher lows, which is a break above the effectively 69.50 area here, as you can see, then we trade to the 70 cent, which is also close to the 200 moving average on the 1 hour. So the 1 hour is probably where it's at in terms of which way you're going to trade this. The short is more likely, and like I said, it's a lot closer to actually getting in, and that's why I'm probably got a bit more of a preference to that one. So definitely good trading on it. It just depends on which way it breaks, so keep an eye on that one. But hopefully you were able to catch the first initial move, because that was a good one and it hit our first target very quickly, and got very, very close to the second one. So we'll see how that one plays out. We'll move on now to the US dollar CAD. This one has played the game as well. As you can see, it found the support that we hoped it would at this level here last week. You can see all of that previous resistance that became support, and the 200 moving average on the daily, of course. All bodes very well for a long move, and it did, and it broke all. Basically, look, even though we were targeting the 130 area, I mean, it's very, very close to it as well. As you can see, we had really, really good movement and momentum, and quite frankly, when you are actually targeting a very key level, I don't mind taking the profit out a little bit earlier. I often do anyway. We know we've got, in our course, we've got the 80% rule that we generally follow, and when you do that, most of the time you're actually out of these trades anyway. The two trades that I've talked about already, you'd be out of. So it does make a difference. because quite often you can get in and actually get into another trade. That's the beauty. Once you're actually out of a trade, even if you didn't reach its full expected profit, when your risk-reward ratio is good enough, you can actually get out of that and potentially get into another trade. And by that I mean, if it pulls back to a moving average and then gets going again, it gives you the opportunity to get back in. So look, like I say, it's kind of in the middle of, if it breaks to 130 and closes above there, you generally, we're going to probably find a move up to the 130.50, and that is probably the likely move. Momentum is definitely with it now. We've got the signal line out of the MACD, plenty of market momentum in its favor, and of course the dollar index, which we'll touch on in a second, again is looking fairly strong. So I'm liking the long move on this one better than the short, because obviously we want to trade in the direction of the short-term momentum. And yeah, but realistically though, if you're not already in and you haven't captured this move, which hopefully you did because we were talking about it long enough, we'll be looking at a break of above the 130, and then we'll be looking on trading onto the 30.50. To that, of course, to that extent, you've got to go to the smaller time frames, go to a 1 hour, very similar to the Aussie, in the sense that, a break above this level here, a break above the 129.60 area will basically gravitate itself to the 130 as a rule. Generally, that's what it wants to do. And I wouldn't imagine it's going to have a lot of resistance getting there. At the 130 though, if it breaks that and breaks it convincingly, we trade it up to the 130.50. So realistically, hopefully you already caught the move, but if you haven't, look for a potential break of this level here, and that'll give you a 40 or 50 pip scalp to the first resistance. Of course, a series of lower highs and lower lows, and then we trade it down to the 128.40 area, which is this support zone here. That's the level that we would be shorting it down to if it did indeed reverse and start to trend down. But yeah, my preference is certainly on the way up on this one because the momentum is well and truly with it. Okay, we'll go to the US dollar yen. This one's seen a pretty good move as well. I'll go to the daily straight up though, and we'll just quickly adjust that. All right, so again, this has been one that's basically bounced off the support. The role reversal zone was extraordinarily strong. I mentioned it a million times that these levels are very, very strong, and hopefully you were able to catch that move up. It went basically. It's nearly a 300 or 400 pip move. It's been a big, big move, very, very aggressive. But the signs were there. There was no surprises there that the role reversal zone was going to hold up. When it retested with this candle, off it went. We can see that we've got the hammer candle there off the support. It's really targeting the 136.80 level. It looks like it wants to get there. It's around about 100 pips from here. Hopefully you've already caught a lot of this move already, but if you haven't, look for a bit of a pullback on a smaller time frame to get in. If you go to a 1 hour or something like that, if we get a bit of a pullback to a 20 moving average throughout the day, maybe you can trade off that. This is a bit of a roll reversal zone, so if it came back down to the 135.50, which is about a 35 pip drop from where it is now, if it came back and retested that level, the 20 moving average will well and truly be there by then for the 1 hour, and that could be a good launching pad to take it up to the 136.80 area that I think will be the resistance for it. But of course, failing that, I'd be reluctant to take this one short, actually. Like, I don't even like the short on it now because it's got all of the key moving averages behind it, and I'd probably just let any short go. If it starts to short off, I'd probably just let this one go and let it play out. But the long opportunity down to the 20 moving average on the 1 hour, and I'd be looking to take it long to the line that we've got here, which is around the 136.80 area. All right, I'll go over to the dollar index now. So you can see the big strength that we've seen. Roll reversal zone, absolute classic roll reversal 101 here. Came off the base. You can see the resistance through here. Big support, breakthrough, broken through the 20 moving average, and then off it went. Obviously, the euro is the biggest trade on this one, which is obviously really good. But it was giving us the signs that it wanted to do this, so we shouldn't. No one's going to be surprised that the dollar strength returned. Now that it's broken through and past this level, I'd be thinking that probably the 108 is the next real target for it. The strength is high. The MACD was very short-lived. Both MACD pullbacks you can see here on the daily. Every time it went into negative MACD, it turned around quite aggressively and really bulled up, and it was the same thing here. We were already into the positive territory, so good chance that it's probably going to break up higher and get to the 108. So really the euro is a trade, obviously. So you can see that we broke down from that level, the 50 held it up, broke down below the 20 moving average, and now we basically already hit the target that we were aiming for, and now it's broken the new target that we're actually setting as a trap for parity. So now it's broken down below the 101 or the 101 there. We're sitting here on the new candle at basically 1.80. We're probably targeting the 100. This is where we're aiming for, really. The parity level is probably what's going to be the gravitational pull for this one. Now, dollar looks strong, and obviously we know the euro is the inverse of that, so we want to base it, or close enough to the euro being the inverse. So what we want to do is see a breakdown a little bit further. Hopefully you're already in, and if you're not already in, look for a pullback very similar to the yen. Go to a 1 hour, and a bit of a pullback up to the 101.20 would be fine. I don't think it has to pull back that far. Even a break even lower down below the 180 there. A break there on a 1 hour would almost get me into that. I think we've already seen it break the key zone. So a series of lower highs and lower lows will keep me going there. Still scalping though. Like, we're not going for any big moves here. Obviously, we're just going to the next real level, and the next real level on this one's parity. So been good trading though. So hopefully you're able to catch hold of that. And look, even on if you go to a 15-minute chart, you can see that once it did break through, it was quite aggressive. The pullback was fairly shallow. Like, that's not even I think that's 23.6 pullback on that move. So it was very, very shallow, and now it's starting to break through. It's trying to break this level here. If it does that, especially on the 1 hour candle close, then we start to look for potential shorts to continue it down to parity. All right, the S&P 500 is the last one we'll have a look at. So we'll go to the daily, of course, and yeah, look, this one's done all the things that we probably expected it to do. Last week we thought the next level was going to be the 4,300. Hit it and found resistance at that point. Look, we know that we've got a roll reversal zone there. We've got a lot of roll reversals at the moment, and they're all playing out quite nicely. It hit the zone, hit the 200 moving average on the daily, which is a big deal. As you know, we're extended away from the 20 moving average on the daily, which is also a big deal. And we're finding resistance exactly where we would expect to find resistance. So hopefully you're able to get that long. This has been a bonanza on the longs. We've been able to get a lot of these moves. The 4,300 hit its target now, so you should be well and truly out of that. And basically, look, I wouldn't be just shorting off this level. I'd be probably waiting for the next confirmation. If we see a series of lower highs and lower lows on a 4 hour chart, that's what it would take to reverse this trend. Then I'd be convinced that maybe we're going to go back down to the mid 41.50, something like that. Like, the 4 hour is, I'll go to that now. All right, so what we're looking for is a series of lower highs and lower lows. If we get that on a 4 hour, and and we actually get the close down below it on a 4 hour chart, I'd be starting to target this level again, which is around the 41.50. Again, scalping mode, I'm not convinced. Look, we know September is one of the weakest months of the year. There's no question about that. It's proven to be the case many, many years over and over and again. So we're probably going to see a bit of weakness in September. Whether that starts, if this is the catalyst that starts it, it may well be. We're only, a week and a bit away from it anyway. So it is possible that it might start its downturn now. But I would be still probably not attempting a big move. I'd be probably more inclined to take the shorts and go for scalping opportunities, at 50 to 100 pips at a time. I think that probably gets you better results in the long run, because you get in and out of the trades more often, and it just means that you get more moves. I mean, you might get 3 moves on the way down instead of the 1, but you might get better pullbacks and actually get bigger, chunkier moves out of it. So, look, if something was to be a little bit abnormal and actually just break this level, rather than actually coming down and making a lower high, lower low, it actually breaks up and goes higher. Again, I'd only be scalping, and I'd only be scalping it to the next 50-point levels. I'd only be going 50s at a time here, knowing that we're going into a seasonal time of weakness. So just be really careful about that. Just understand that there is generally a fair bit of weakness into September. So pretty good trading though. Hopefully you're able to catch a good move on that. And now we're looking for the support and resistance to actually play its game at the roll reversal zone, and look for the short to around that 41.50 and 4,200 if you want to scalp and be a little bit more conservative. So hope you had a great week's trading. I think we had some great opportunities. A lot of what we talked about last week played out quite nicely. So hopefully you're able to get hold of that. Have a great weekend, and I look forward to seeing you all next week.